Hello everyone, welcome to our YouTube channel, and today I will be talking about how to select stocks. And this strategy is not known to many intermediate level traders, and it's known as OI increase price increase. So as you would, I'm assuming you know what is an OI, open interest. Open interest is where there is a lot of buying and selling interest at a particular strike price, and sometimes that does not actually indicate the price is going to make an up movement. But what happens is when you select this as OI increase price increase, it is set to confirm an upward trend. It's not 100%, but an increase in open interest as well as um, increase in price confirms somewhat an increase in the uptrend, and same confirms the vice versa. So if it is a increase in open interest along with a decrease in price, that can confirm somewhat as a downward trend. So what happens is when you type it in Google, and there is an option to check in money controls, which will give you the prices of futures. So open interest, as I told you, the open interest will indicate the open interest price strike prices and how open interest is being shown, the amount of volumes, etc. Second option would be when the price is also increasing with this open interest. That confirms somewhat the uptrend of these stocks, but you can hedge with a put to lower put to just to make sure, and you can exit. The strategy can be used with stocks. For example, here today is 10th of June 2018, and this is the latest list of stocks which we can see in OI increase and OI open interest OI increase, and price is also increasing. So that means CG Power, I have already seen CG Power, which has given a good momentum. JP Associates, Bank of Baroda, and the complete list of stocks where the open interest is also increasing and the price is also increasing, which is confirming somewhat an uptrend. It can be a short term, or it can be for very short term too. But you can utilize this. You can utilize this information to take position on short term stocks, even though it is if it is near its 52 weeks low, then there is a very good possibility that it is bouncing back from its support zone. So that's but what you can do is, again, this is just data from which you can have an opinion on it. If you can hedge your positions, if you are taking a combination of futures and options, for example, you take a future position and you decide uh, a particular stop loss, then it's also advisable to take a small put also to hedge your position, so that even if your stop loss is hit, you're still protected and your losses will be less than the normal thing. But if you are using it in stocks, again, it would be a good idea to take the position for short term, and whenever you see profits, you can exit. That would be the idea. But this is a good way of identifying stocks. Sometimes we invest in stocks for short term trading, and then the stock will lose its momentum, and then that's when you will be stuck in the stock for months and probably for years also sometimes, and then finally you exit in small profit or even in loss. But this is a good way of finding it out, how to identify stocks for short term trading. So if you have any questions regarding this topic, feel free to write to me. I'll be happy to answer them, and feel free to give me feedback on my videos, and I'll be happy to take your feedback and create more quality videos in future. Thank you, and I will see you again on my next video.